Hi, everyone. I am Tammy Nelson. I am the Deputy State Controller, and I am uh, hosting the OSC office hours. So we'll go ahead and get started. And what we're going to do today is we're going to introduce ourselves. I'll talk a little bit about what this office hours is intended to accomplish. We'll talk about some areas of some focus and some resources, as well as some just hot topics at the moment. And most of the time will really be for you guys to answer or ask questions of us. So with that, I would like everybody to introduce themselves, your name and your department, so we get to know each other. And I will go ahead and call out names. And if you'll just chime in, that would be great. So I'm going to start with Alyssa.
Hi, everyone. My name is Alyssa Martinson, and I am with the Office of Alternate Defense Counsel.
I am really sorry for butchering your name. Alyssa, is that right?
It's okay. No worries.
Awesome. Well, welcome.
Thank you.
Joe.
Hi, I'm Joe Zhao with History Colorado. So I joined the organization in August of 21. So very new.
Great. Brandy.
I'm Brandy Peak. I am with the Colorado Department of Corrections.
Great. Welcome. Christy.
Hi, I'm Christy Walker, and I am with UCCS.
Welcome. Cynthia.
Hi, I'm Cynthia Muse. I am from CU Boulder Controller's Office. I think we had a meeting a few weeks ago, Tammy. I think we met before.
Yes, I think we did. Yes. Good to see you again.
Nice to see you again.
Elizabeth.
Hi, I'm Elizabeth Spencer, and I'm with the Department of Local Affairs.
Welcome, Elizabeth. Faye.
Hello, everyone. I'm Faye Dong. I'm financial specialist at FSU. Nice to meet you.
Thank you, Faye. Gina.
Hi, I'm Gina Sanchez. I am in the Office of the State Controller, and I work on the SLF reporting for the state.
Thank you, Gina. Jean.
Hi, I'm Jing Yi. I work for the state offices, State Controller's Office, FSU, Financial Service Unit.
Thank you. Jeffrey.
Hello, Jeffrey Kahn, Office of the State Controller. I'm the Director of Financial Reporting and Analysis. So the year-end stuff is pretty key to my team.
And we're glad. We're very glad. I'm Jenna.
Good afternoon, everybody. My name is Jenna Culver. I'm a Senior Budget Analyst for the Office of Economic Development and International Trade.
Awesome. Welcome. We have a couple of Jennifers. So Jennifer Henry.
Hi, this is Jennifer Henry. I work for the Office of the State Controller as well in the Financial Services Unit.
And then we have Jennifer LeBlanc.
Hey, Tammy, it looks like Jennifer introduced herself in the comments there.
Oh, thank you. I missed that. Welcome, Jennifer. Julie.
Hello, everyone. I'm Julie Milam, and I'm the Director of the State Office of Risk Management. I just come in case there happens to be a question for me. There never is, but.
Well, we might have to think up one for you, Julie.
I know. Somebody will come up with one now that I'm here.
Yes. Laura.
Good afternoon. I'm Laura Curnow, Controller for the Department of Early Childhood.
Welcome.
Thank you.
Mark.
My name is Mark Davis. I work in the Office of the State Controller in the Financial Reporting and Analysis team.
All right, thank you, Mark. Melinda.
Hello, I am Melinda Hamilton. I'm the Program Director of Sponsored Projects Accounting at the University of Colorado, Colorado Springs. Thanks for having me.
Absolutely, thank you. Nancy. Oh, we have a couple of Nancys. Nancy Copeland first.
Hi, Tammy. Hi, everyone. I'm Nancy Copham. I'm the controller for the Department of Natural Resources.
Welcome, Nancy. And then we have Nancy Kelly.
Hi, I'm Nancy Kelly. I work with the Department of Natural Resources as well.
Great. Welcome. Nelson.
Yeah, my name is Nelson, and I'm from the Healthcare Policy and Financing.
Welcome, Nelson. And Teresa.
Hi, I'm Teresa Tran. I'm the interim controller of higher education.
Welcome, Teresa.
Thank you.
Did I miss anybody? I'm flipping through the list. Oh, I think I missed Jean Felsgraf.
I'm Jean Falsgraf, and I have with me Amanda Coleman. We're both from Department of Corrections.
Welcome. And then I think I missed Lynn Kaplan.
You did, but that was fine. I had no problem being skipped. I'm Lynn Kaplan. I work under Melinda Hamilton in Sponsored Projects Accounting for the University of Colorado, Colorado Springs. Nice to meet you all.
Great. Did I miss anybody else? Well, thank you for joining in today. So what we're here to talk about, and this really is primarily geared to state agencies. So for the higher ed folks, if there are exceptions or something different, I'll try to mention that. There are some things that on the list that are kind of core specific, but the concepts certainly still apply. So the purpose of this really is to just provide resources to the agencies, and particularly newer controllers and newer senior level accountants in the state. It can be kind of an overwhelming experience coming into the state for the first time. And depending whether you come from government or not, there's just a lot of nuances to the state. So we thought we wanted to create a place where we could kind of at a high level point out some things to you, but mostly give you a time where you could just ask any kind of questions that you want that maybe you wouldn't want to in other forums. So we'd like you to get to know the OSC, who we are, what we do, and what we can do for you. We'll talk about some general priorities and available resources, but really mostly time for you to ask us questions. And here today, you're not going to really be hearing anything new. This is not our means to communicate new requirements. This is just some high level things to point you in directions. If there's something new, you'll hear about it. Otherwise, you'll hear about it through alerts, through the controllers forum, or some other ways. You may hear about it here, but that won't be the only place. So a little bit about the State Controller's Office. I'm sure you do know that Bob Jaros is our State Controller, and there are 6 primary units in the State Controller's Office. We have the grants unit. They do statewide oversight and training around just general grant compliance. We have the core operations team, and they're the team that maintains our core financial system and the help desk and all the things around that. We have Bob has state procurement and contracts. So that group handles all of the state price agreements. They put those out to bid and develop those. And they also do consult with the agencies and do the approval on high-risk contracts. We had Julie here. She is the director of the State Risk Management Program. That's one of the units. It's not new, but it's new under Bob. So she's a great resource in terms of all the state's property liability, all of that insurance stuff is Julie's cup of tea. And then we have the ARPA reporting and compliance team. So the state got 3.8 billion in state and local fiscal recovery funds and a few other little buckets of federal funds with COVID. So this is a new team that was created solely for handling that federal reporting and coordinating with the agencies. And then the standard accounting team is the financial operations section. And they're within that, that's generally who you're going to hear from if you need anything accounting reporting wise. We have the financial services unit, and you met Jing on the call. She manages that unit, and they really are the liaisons with the state agencies about questions, all sorts of technical guidance. They review your OSC diagnostic reports, and they're also responsible for but approving budgets. So they approve all of the long bill, everything else that comes through where you need a budget in core form. The financial reporting and analysis unit, you saw Jeffrey earlier. He's responsible for preparing the state's ACFR, the annual comprehensive financial report, and all that goes into that, all the the fiscal procedures manual, the exhibit, the training, everything that you need to know to get him what he needs for those statements, as well as a few other reports, TABOR, cash funds, there's other things, but the financial statements is his primary focus. Central payroll also falls under this unit as a separate section. They handle all of the back end processing, the bank files, the 941s, all of that stuff related to the state's payroll. And then we have central accounting and vendor operations, and that is our central team that manages all the banking setup for new vendors, and they process and approve the make sure there's W-9s, and they issue the 1099s. So anything related to paying vendors out of court, that team is a good resource for. So that's a little bit about the OSC, and if you've sat on these, excuse me, in on these before, you've heard that spiel. But I think it's always good to go over, in case we have new folks on the call, just what we do. And if you have a question, hey, maybe one of these folks can help. So what I thought I would focus on for this time was some of the kind of standard things coming up around year end that's helpful to know. And this really is related specifically to core, but higher ed, I'm sure you have the same types of things happening just in your system. So one of the first things that has to happen to get ready for the new year is all of the existing encumbrances in core. They either have to be set to roll or lapse. That's your purchase orders, your contracts, your GAEs, all of those things. So on July 1, there's a table that is populated in core, and that is the RLPSD table. And that gives you all the documents as of June 30th that were in final status and have open balances on them. And in that table, you will have to either set your documents to roll or lapse if you want to set them to do something other than the defaults. So the defaults are, the RQSs are your requisitions. They haven't made it quite to the process of being awarded. The assumption is if you haven't made it that far in the fiscal year, it's not going to happen in the fiscal year. Those are automatically set to lapse unless you go into the table and mark it to roll. In most cases, you won't need to, but if you're getting close to wrapping up something, maybe you want to. All of the award documents, your contracts, your POs, your GAEs, the governmental versions of those are set to automatically roll unless you say to lapse them. And so what happens is the table's populated on July 1. You have through period 12 close, which is somewhere, I didn't look up the date. It's around the third week in July to populate that table. But in the meantime, you're also paying down on invoices. Anything that's still open as of period 12 close, if you've paid on it, you won't have an open balance to do anything. But if it's still open, those things will roll or lapse based on the defaults, or if you have chosen to go ahead and mark something other than the default to happen to those. One thing I did want to mention is that rolling the encumbrance doesn't necessarily roll the budget. It just means it's carrying forward that document into the next year. depending on what your budget is, it may or may not roll with it. So if it's federal funds, for example, and your federal funds do roll because it's on a September to September year basis generally, that budget still is there. But if it's an operating budget that ends June 30, setting that purchase order or contract to roll, you would be using the New Year's budget for that. So I just wanted to mention that is not exactly the same thing as budget. One thing to keep in mind, it's helpful on June 30th to have all of your procurement documents in final status related to the closing year. If you have things pending on it, modifications, that won't necessarily get pulled into that RLPSD table. So that's just something to keep in mind, as well as on period 12 close. If you have a modification in process that you don't have finalized, it won't roll the right balance into the new year. So it's always helpful on June 30th and period 12 close to have all of your closing year encumbrance documents in final status in core. And what happens in core is that up until period 12 close, if you go into the BQ screens, you'll see pre-encumbrances and encumbrances. Once that roll lapse occurs, if you go in on the next day after that, all of those encumbrances on the BQ screens will be gone because that process zeroed them out. The only reason they would be there is if there was some issue in the roll lapse process where it didn't clear it out. And then the core team, they follow up on all of those things and they would be contacting you if that needed to happen. You may also need to, there is some limited capability if you need to roll something and the account coding is a little bit different than it needs to roll into in the next year. On the front end, there's a process if it's an appropriation unit to have the core team help you just repoint that in the process. But if it's other things for some reason, if your encumbrance needed to come from a different fund in the new year, you would have to then manually, after things rolled, go ahead and modify like the fund. So there is a little bit of cleanup work after the roll lapse process, depending on if your funding streams changed or if something went astray in the process. So until you really have those documents rolled, it's hard to get started or keep going on paying invoices in the new year. So generally, that is one of the key things for opening the new year. I don't know if there's any questions before I move on to some other things, but I wanted to mention these things. All right. And I should have mentioned this at the beginning. In the chat, I dropped the link to this presentation as well. The very first thing in the chat is this PDF presentation. Another thing, things that I'm focusing on now are things that almost always the auditors are going to ask about, regardless of what your agency does. They tend to always look at these things. They'll look and make sure, did you accrue all of your regular operating expenditures? In core, the easiest way to accrue your expenditures is get your vendors to get your bills to you and get them paid by period 12 close. By paying your invoices between July 1 and period 12 close with a June 30th record date, what that does is it effectively accrues it for you, because it will create a vouchers payable that will get liquidated in the new year once that payment is issued. So you're automatically effectively getting your accruals without having to do extra documents. You're just paying your bills. I know that's not always possible. You may not get all your bills in. So if you know you still have bills coming in period 13, you can go ahead and accrue those on ACC documents. And one thing to be aware of is that you will also want to process the reversal of that accrual on in the opening fiscal year on an ACL document during that same time period before period 13 close. Generally, you want to approve the ACC and then copy it forward and approve the ACL. What's not at all intuitive in core is that the ACL, which is the new year document, actually creates a cash expenditure in the closing year, which generates RE documents if you have your program set up to automatically earn revenue based on your spending. So it impacts your revenue if you don't do your ACL, depending if you have like a federal program or you're earning federal revenue as you spend. So that's a nuance that is helpful to know. I don't think that's always intuitive. You think, oh, I have time to reverse my accruals. And what we do is we don't pay out of a payable balance in the new year. We always reverse the accrual via the ACL and then issue the payment as a FY New Year payment. And those entries will cancel each other out and actually hit your budget in the closing year. But that's the process that we follow in core to make sure our 1099 reporting and all of that stuff lines out the way we need it to. And then in terms of payables, you're going to want to, depending on what your, I guess your vendor population looks like, if you know your bills, that's great. But in some cases, you don't necessarily know, we close period 13 in early August. You may know that, hey, I get some amount of bills, until late August, September related to the closing year. Just because you don't have them doesn't necessarily mean you shouldn't record anything. If you have that as a routine pattern of activity, bills are going to come in and you have some reasonable way to estimate it, you're also going to want to book an accrual. Just that estimate is better than nothing if you know something is coming. And then you can satisfy the auditors that yes, you did do your due diligence in capturing the population. Another thing that the auditors always ask for, it seems like regardless of the size that you are, is compensated absences. That's your accruals for unused sick leave and vacation. So be sure and look at that, as well as any revenue accruals. If you earn revenue that comes in on a cyclical basis, you'll just want to make sure and divide that up between the right years. And there's lots of information on these things in the fiscal procedures manual, detailed information about exactly how to calculate the compensated absences and things like that. And then in terms of balance sheet, you're going to want to have take a look at your capital assets, make sure anything you have purchased that meets the capitalization threshold, that you go ahead and get that capitalized. One thing to note in core, that depreciation is an automatic process that is calculated monthly. Just know that it always recalculates inception to date every month. So if you do manual adjustments to that, just be aware to keep in mind the timing of when the last depreciation run is. You'll want to do your entries after that. If there's something, wrong with what the calculation is doing, those calculations are based on how you enter your fixed asset in core, whether, the service dates when it was put into service and things like that. So that's something kind of a nuance to pay attention to in the core ops. They have a information and guides on the core side around depreciation to make sure you're doing that right. And one thing that's always good to do is make sure your population is complete of capital assets. One thing that I know a lot of folks do that's helpful is they go ahead and review what's in their accounts for non-capitalized equipment, just to make sure another peek at, hey, did something slip through the cracks that I should have capitalized? So you can go ahead and get that done prior to close. And then I think intangible assets is becoming a bigger and bigger population all the time. Years ago, it didn't used to be such a big thing, but it's a huge thing now with GASB 87 right to use leases and GASB 96 coming up this year new. Your right to use assets for IT subscription arrangements. GASB 87 is newer, but GASB 96 is new. So those are things definitely that you'll want to spend some time on. And then just in terms of if you're new looking at something that you don't have a ton of familiarity with, one of the things I would recommend is pulling your trial balance and just looking and see where you have large balances and make sure, hey, like what, you know, that balance I need to look into a little further to make sure it looks right. One thing I like to do, this is sort of my own personal go-to. If I'm looking at something I'm not familiar with, I pull the GA10, which is the trial balance, and it divides it up by like department codes and things like that, that sometimes is a little bit too granular. I take the raw data and I put it in a pivot table with all of the accounts down the left and all the funds across the top. And then that's just a really quick, easy view, like, hey, this fund has huge receivables. That fund has bonds. Those are extra things I'm going to want to pay attention to. So that's just my own personal sort of go-to when I'm unfamiliar with something. I pull the GA10 and pivot it. That gives me a nice just overview of what that fund is about. And then in terms of, this isn't exactly accounting related, it's statutory related. In Colorado, we have a couple of things that drive accounting entries, sometimes late accounting entries, because we're focused on accounting and closing. But these are a couple of areas where you might want to keep in mind as you're closing, so that you don't have to redo some things. So there is a statutory report called the Cash Funds Uncommitted Reserves Report, and it's the complete opposite of overspending your budget. There's a statute that says, not for all funds, but for a lot of funds in the state, you can have only a limited amount of fund balance in the fund. Otherwise, you're in violation of the statute. And that fund balance is generally 16.5%, which is about 2 months of fee fund balance. And there's a complex calculation around, how that's calculated. My tip would be for you is the OSC 23 calculates that balance by your funds for you. That's available in late July. Go ahead and take a peek at that before close. If you're kind of getting close to that limit, maybe look at your funds and evaluate, hey, I don't want to be over, because if you're over, you have to report to the JBC, you have to have a plan, how you're going to reduce your fund balance. Maybe you're in a fund that's flexible, that you could, cover some expenses that would have been paid elsewhere, or maybe it just helps you plan that maybe you can do something to alleviate an excess balance and not do it after close, so that you have a post-closing audit adjustment. We try to avoid those as much as possible, but that might be one thing to look at during the closing process for you. And I'm sorry, higher ed, that does not apply to you at all. Higher ed is a Tabor enterprise, and that statute does not apply to Tabor enterprises. So, but Tabor, that leads into Tabor. Tabor is the other thing that is a state requirement that does impact accounting. So I think everybody knows what Tabor is. When we hit a certain amount, we all get checks in the mail or credits on our tax refund. We have to refund excess Tabor revenue. So what determines Tabor revenue in the accounting system, and this is the same for higher ed versus non-higher ed, in core, your revenue source code in non-Tabor enterprises determines whether those dollars are subject to Tabor or not. So revenue counts unless it's specifically exempted in non-Tabor enterprises. And the reason that the way you know that is if on the revenue source codes, there's a roll-up associated with that. And that is the revenue class. If it's NEXM, that means it's not exempt from Tabor and it counts. Anything in that revenue class other than that is the reason why it is exempt. Like federal funds are exempt. There's a whole host of things that are exempt. But if you're not specifically exempted, the default is it does count for Tabor. And that is something that is audited extensively across the department. So there is the OSC 004. It's a report that looks at what you've posted as Tabor revenue, which falls into that NEXM category. And what it does is also in that report, you can run the prior year. So you can compare, like, if something is way different than last year, it kind of flags you. You can look at that early too, so you don't have late adjustments in looking at your TABOR revenue. So in terms of just state specific things, those are a couple of things that you can look at during the closing process that might alleviate some later entries in the system. And then there is one thing I wanted to point out. I forget it's there, so I thought I would mention it. So in the open close calendar on our website, we all look at the calendar and see that all the time. But there is another tab in that calendar, a second tab, and it's called Guidelines. And I just pasted this out, not really to read off or go through or anything, but just know that it's there. There's a list of things to check for, like a little checklist as you're closing. Pay attention to these things. And I did talk about a few of them today, but that's a really nice little, like, hey, just run down that list in addition to the fiscal procedures manual. And that might be helpful for you. And then in terms of priorities, our priorities are the same as they have been for a while and probably will continue to be these things for a little while. And that is implementing GASB 96 subscriptions. So that is all on your guys' plate at this point during the closing process to get those identified and recorded in accordance with the new standard. The partnership agreement, it did allow for monthly employees to go bi-weekly starting in July, and that's only a couple of weeks away. So that will start hitting your payroll departments coming up, depending on how your department has decided to implement that. But that is definitely work on the payroll shops in your offices, in your departments. The core upgrade is in process. They're in the process of change champions that have volunteered or testing different areas. That will continue with implementation expected in fall, sometime late fall, November of this year. And then state and local fiscal recovery funds, the 3.8 billion we got, that is going to continue through 2026, the extra reporting associated with that. So with that, I'll open it up to any questions that you guys have. Okay, and let me drop the link back in the chat. I forgot that you can't see it. Okay, there's the link in the chat. And then Teresa, I will send you the link. Oh, I see it. And Teresa, I will send you the PowerPoint since you are not able to view it since you're on your phone.
Hi, Tammy. I have a question that is specific to SLFRF funds. So we have a project that has administrative cost as a line, and we're wondering if it has to be F&A, like indirect cost only, or if they are allowed to charge direct administrative costs and benefits for an employee that they've hired to administrate this project.
So when you say there's a line for it, do you mean like there's an appropriation unit for it, separating that out?
No, it's in the budget for that particular project.
Okay, in terms of SLFRF rules, any kind of administration, whether it be direct or indirect, it's still counted as part of the project. And we don't need to see that reported any differently than the, the direct program costs. So if as part of your administration, you have to enter into a contract with someone that's over 50,000, you would just have to tell us in your reporting who that contract was with and give us that information. If it's salaries, you would just tell us, you incurred payments to individuals for salaries. You would tell us that in the reporting. There's nothing in the reporting that you would have to tell us this is overhead or indirect or direct admin. You just tell us kind of what the costs are for. So I don't know if that answered your question, but there's not specific, they can be charged to SLFRF,
Okay.
both direct
So-
and indirect. We just don't report it that way.
Okay, so it is an allowable expense if it's direct salary.
Yes.
Okay. I believe that it did call for specific reporting, and that might have been for the monthly reporting that's done through the Gov office.
And that could be. So that is completely separate from the federal reporting. They've, through creating the eligibility documents and going through what the project is, they set certain things that they want to see every month. So it could be part of that. Yes.
Okay, but it's still an allowable expense.
Yes, in terms of SL. The only thing that would not be allowable, and this is not a SLFRF thing, this is just a federal thing. You couldn't charge the same dollar as direct and indirect both. You can't overcharge, but
Okay. Okay.
that's no different than any other federal program.
Okay, thank you.
Sure. There's a lot of OSC folks on the call today, so any and all questions are welcome.
Tammy, we have a question in the chat about the best practice for tracking payments against accruals. This one, I just want to say a little bit of what I'm thinking on the ACC document, that you can enter the line, the information in the line description. Like for example, you can, when you book accrual, you can enter the vendor's name if you know that this is accrual, it's for a certain vendor or certain PO or CT or GAE. When you enter those information in those description, it will help later when you do the download and reconcile against the payments that you made.
Okay, thank you. And so is there an upload template for the ACC?
Right, I believe, yes, there is a ADS upload for ACC.
Okay, thank you.
Thank
You're
you, Faye.
welcome.
Unfortunately, there's not a good like statewide method that would just spit out a report and say, these are my accruals, these are my payments, this is what I, over accrued, under accrued.
Yeah, we just have a big beastly spreadsheet that I was trying to, but that's a good idea to put in descriptions. I think that would help a lot. So
We did something when we converted from coffers to core. I can't remember what it was, but I think it was specific to that conversion to identify things. But it was something like what Faye was saying in descriptions where you were paying something, was it accrued, you entered something in the description field. So that probably is a good way to somewhat semi-automate it if you can consistently do that. I don't know if anybody else on the call has other ideas, but Jennifer, 15 ACC. That's good memory. Anything else? And you're always welcome to reach out at any time with questions. And so the next couple of months, these meetings hit, one on the 4th of July, one right during period 14 close. We're not going to be holding these the next 2 months, but please know that we are here to help you at any point in time, either FSU reporting, the federal team, or myself. If you have a question or a need, during close once a month probably wouldn't be enough, quick enough anyways. Please reach out. And if you don't know who to reach out to, we will get you to the right place. If you reach out to someone in OSC and it's not the right person, we'll get you pointed to the right person that can help you. All right, well, if there are no other questions, I'll go ahead and end the call for today. All right, thank you.